Sydney's property market right now, it's got a bit of everything: energy, confusion, and a few truth bombs the headlines don't want to print. G'day folks, it is Matt Hayson here looking at everything impacting Sydney's property market this week. Well, we're certainly in full spring swing now, and open homes, they are humming, listings are surging, and we're certainly seeing plenty of deals being done. But also, it's one of those markets that is keeping you guessing. Some campaigns, well, they're flying. Others, they're fighting for traction. And it's not one clear narrative. It's a patchwork of buyer moods, price tension, and selective demand. And once again, the media seems to be seeing a very different version of events for the property market. The AFR headline this week read, "First home buyer urgency fuels auction action." And Domain's data claims 40% of Sydney homes are selling prior to auction. And their research chief, Nicola Powell, says that shows rising momentum. But I have to say, that's not what we're really seeing at the coalface of the market. On the ground, buyers remain a little bit hesitant, not hurried, and agents are working harder than ever to hold that buying interest through the 4-week campaign. Now, some sellers are sensing that properties are stalling, and when offers surface, many people are jumping on them. That's not a market that's roaring ahead. That's a tactical, cautious dance between the buyer and the seller. Now, the data as well, that doesn't stack up. According to SQM Research, which is far more accurate, last week saw 1,443 Sydney auctions booked for the week. That's the second biggest week for the season. And the overall clearance rate was just above 50%, and only 25% of those homes sold prior to auction, not 40%. And then Saturday alone, we saw over 1,000 auctions, and only 28% of those sold before going under the hammer. Now, that's a far cry from the rising momentum story. It's a market adjusting to the high level of volume and some market realism. Meanwhile, the broader economy is also sending its own mixed signals. Unemployment, that ticked up 0.3% to 4.5% last week. That's the highest level since 2021. And now there's renewed chatter that the RBA could cut rates on November 4. Just a week earlier though, rate cuts were off the table. Now the goalposts have shifted again in the same cash rate merry-go-round that we've been on all year. Inflation data lands next week, and if the UK and the US are anything as a guide, we could see another bump, which means that a pause is far more likely than a rate cut. And to finish this week, a quick spotlight on something truly unique. If you've ever dreamed of living opposite the spiritual heartland and homeland of the Tigers, well, this one is for you. 17 Chapel Street in Lilyfield. 7 on the Green, it is called. That's right, 7 vacant blocks, 2,306 square metres in total. The largest land release in the area in decades, just 6 kilometres from the CBD, 350 metres from the waterfront, and 20 metres from Leichhardt Oval. All Torrens title, CDC applicable, and guided at 14 million. You can speak with Ben Southwell because this one is sitting on very special ground. And finally this week, the CH Market Mood Meter. Well, last week's high auction volumes has placed the market under some serious strain, and with the clearance rates cooling and buyer focus starting to splinter, this week I'm just going to dial it back a little bit to a 6.5 out of 10 market. Still seeing some good energy, still seeing some good prices, but clearly there's also some hesitation creeping in. So the momentum is certainly there, but it is a super price sensitive environment. So that's what's going down this week. Plenty on offer this weekend, and I'd love to see you out and about. And thanks for watching, and I'll catch you all next week.